Older Americans are returning to work. BlackRock warns investing in the S&P just isn't enough for retirement, and how to best use annuities for retirees. That and so much more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome in to Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. You can find them right here in Seattle, Elevated Financial Management. Again, it's all about helping you get ready for retirement. They've got over 50 years combined experience in the retirement planning business, and it's all about the plan. It's all about being proactive. They're certified financial fiduciaries. I'm Morgan Patrick. A pleasure to jump on. Before we dive in, guys, it's been a couple of weeks since we've kind of powwowed and done some new shows, but how's the week been and how are you?
We're doing good. We're very excited up here in our office. In fact, we're about ready to blow out a wall and add 5-6 more new offices, so we're really excited about that. We're hiring more staff and of course the Seahawks won the Super Bowl, so we're riding high right now, getting ready for baseball season. We're excited about that. So again, a lot of nice things are happening up in our office and in the greater Seattle area. So everybody's in a great mood, and we're happy. We're just looking forward to running more and more appointments to help everybody get the retirement of their dreams set up.
And let me just add this. You guys are coming off a big conference where you got together with like 400 advisors. Mm-hmm. Casey, just a little bit about, it's almost like continuing education where you get together with some of the best in the business and you just talk about how you can do it better.
That's exactly it. Yeah, it's just, there's a lot of conversations about how can we be better, right? And what I really appreciate it, right, about that type of event, and this one in particular, is that there is a lot of different folks in that room, right? So there's folks in the room that have been in the business their entire lives, 30, 40-year career in the business. There's folks that are newer in the last couple of years and everywhere in between. And we get to talk with people that are doing different types of planning than we're doing, but still have the same types of goals for their clients and clients that need the help and want to create income in retirement and things like that. And so we just get to share ideas. And, I love what you said. It is kind of like continuing education because it's just a different take on how to do things. And what's cool is we go to these events. We took a couple members of our staff with us. And me and Mark sit down and we download and figure out what do we want to do different, right? How can we be better and how can we lead our team in the right way and make sure that we're doing the best that we can for our clients. So it was really exciting. You always come back kind of pumped up and ready to get after it again. And so we always talk about how we wish we could do them more often throughout the year, but it is a fun thing, and we do get to go to a few of them. But it'd be nice to have one every month if we could. It's just great, and the world is moving quicker than it ever has. So it really requires a lot from us to stay on top of it and make sure that the type of planning and the type of tools and things that we use are not the tools of yesterday, but making sure that we're looking forward to what's coming up.
Yeah, it's all about planning, and when you get together with the best of the best and you start talking about just practices and how you go about your day, how you set up your week, how your appointments are going, and what your constituents, what your people that you're working with are concerned about, and you can really add to that conversation. And certainly the other 399 advisors that were there, I mean, they're taking that same information back to their home offices and they're making it work for their clients. So it's important to, have these types of masterminds, have these types of think tanks. And certainly it's great news that you guys got a lot out of it, and it was Vegas. So, hey, not too bad. One of the things I love about this show is we take the latest when it comes to articles pertaining to retirement planning, and we put it in front of you, and we start talking about it. You're going to have questions, and you can grab one of our complimentary appointments and come in and talk about your retirement situation. So, guys, the first one in front of us, Eleanor O'Sullivan from Rethinking 65. Older Americans are returning to work. So you saw it, and I've seen this trend, and there are a couple of reasons why. Either they're bored or they've got to return.
Yeah, and I'm glad you mentioned that because we know the jobs forecast last week wasn't that great. A lot of jobs were lost. We look at the volatility in the market, We look at the war that we're dealing with. We look at the price of oil has skyrocketed, causing a lot of trepidation and angst for a lot of our listeners. And it made this one comment. It said that the survey that was done says that retirement isn't paying off for all American workers, especially in their pocketbooks. And this is very dangerous when you really think about this, because if you don't have a plan, then you're not going to be able to weather the type of inflation that we're dealing with right now. And then taxes on top of that. So again, this is something we're really, really concerned about. And this is something that everybody, there isn't one client that isn't coming in right now and isn't concerned about this to a high degree.
Yeah, and rightfully so, right? I mean, the cost of living is crazy. So whether you're employed or retired, it's a scary thing. But especially when you're retired and you realize, man, my nest egg is only so big, right? I mean, that's really what this comes down to, right? Is the realization that my nest egg is only so big, and if I am going to go back to work, I'm going to have to do it now. I'm not going to be able to do it when I'm in my mid-70s, right? Even if you feel up to it, most places are not looking to hire people that are in their mid-70s. That's just the reality of it, right? So that being said, it shortens the runway, and it just only gives you so much opportunity to actually be able to take advantage of that and get something created so that they can hopefully build that nest egg and make sure that they're on the right path. And I think that's really the key. And, the other part of this too, I thought this was really interesting. It said that in September of 25, 7% of retirees have returned to the labor force, with nearly half, so 48%, saying they returned to work out of economic necessity.
Yeah, that's high.
Yeah, that's really high. And then I thought this was interesting too, because this really ties in a lot with the type of planning that you and I do here, Mark, and our team does. Which is that, are you retiring to something, right? It isn't just about the finance, but what are you going to do? And the next kind of statistic here was only 14% of respondents said they returned to work because of a desire to stay active. Now, 14% compared to 48% that returned because they had to, very different numbers. Yep. But still, kind of another point that we can take from this is 14% of these people are coming out of retirement because they're not doing what they want to do in retirement. They haven't figured out what that is. And I'll say this, it's better to figure it out now before you retire than it is to get 5 years into retirement and then go back to work because you couldn't figure out what you wanted to do. Yeah. So that's a conversation you should be having with your advisor. Not only can I retire, not only how much income can I have, not only what a tax is going to look like, but what is it that I want to do? What are my goals, right? Mm-hmm. What's my purpose now that I don't have this job that I go to? And you know what? For some people, that's a super easy question to answer. And for others, it's really, really difficult. And that is totally okay, but it's still something that you've got to plan for.
No, you absolutely do.
Yeah, and while we're talking about this, I just think it's really critical because the problem for a lot of seniors is if they get laid off, it's hard to come back into the workforce. Right. I think that's a big part of it. That some have believed, well, I'm out, but I'll find something fairly easily. And then I just talked to one, he's been out a year and a half now, and he's very discouraged, and he's not getting back in. But I love this, toward the end of this article, it talked about these type of fields that can be good for seniors: healthcare, retail, hospitality, and social assistance. So a senior may find some fortune in going back to work there. But I love this. Many of these fields rely on part-time workers, which can be really good fit for somebody that's just retired, right? They can work part-time. We call it a hybrid type retirement. So there is a lot of hope out there. So if you're listening, just give this some thought, because it's not all doom and gloom. So there are ways to maybe help your own pocketbook work a little bit, keep yourself active and more fit mentally, and it can really pay off in the long run.
Again, this first article we're talking about, older Americans are returning to work if they can find the work. The jobs numbers not very good. Economy is absolutely crazy, and the number that you threw out there, guys, that really jumps out is it's the 48%. That's half, right. Basically half, saying they return because they had to. And it just means things are expensive. Inflation is where it is. Prices are not coming down. We have geopolitical stuff everywhere that's going to impact our economy. So people are they're nervous. So what do? I want to keep working.
Yeah, that's it. And they just don't have another choice, right? That's
Right.
the thing. And it's sad. And I think that's really the key, right? Is with the right type of planning, you can avoid this. Now, if you decide to go back to work because you want to, that's one thing. But the right type of plan will make it so that it's your choice. And that's okay if you choose to. But what's disappointing is if you have to, right? That really stinks. And we've seen some folks go through that, before they came to us as clients, they didn't have a plan that set them up the right way. And so that's really what it comes down to. And so I think this just ties in really well. This is your chance. If you've been listening to the show, if you'd like to have a plan for retirement and you don't, or maybe you do and you just want a second opinion, this is your chance to take advantage of it. We'll sit down, we'll talk about the income, the investments, the taxes, Medicare, Social Security, all those concerns, the things that you're worried about. How much risk are you taking, especially when we look at the market and what it's been doing lately? How much risk are you taking in your investments? And so this is your chance. Don't hesitate. Come into the office. We'll build a custom tailored retirement plan for you. Leave your checkbook at home. We'd be happy to talk with you. Pick up the phone and give us a call.
If you're in your 50s, this is a time to be proactive. If you're in the middle of something, need a second opinion on what you're doing, this is your opportunity right now. Grab one of these complimentary appointments, 866-668-3625. That number again, 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you, but this is complimentary, no obligation. 866-668-3625. Call now. We've got more coming up on the other side. We are back on Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. Elevated financial management, where you can find them right here in Seattle. And it's all about getting you ready for your retirement. They've got 50 plus years experience between the two of them, helping their clients get ready for that day and beyond. And they have a website, treat it as a resource, efmnw.com, all letters, efmnw.com. There are links to the TV show, our radio show in podcast form. Information on retirement planning, background information on Mark, Casey, and their team. That team is growing. And again, an opportunity to get on their calendar, no cost, no obligation, and talk about your retirement, certainly in your future. If you're listening to this show, just stay tuned. We'll give you the numbers, and you can grab one of those appointments. And again, want to remind you that both Mark and Casey are certified financial fiduciaries. Before we move on to article number 2, guys, you had some closing thoughts on our first article we opened up the show with today, and that's older Americans are returning to work. Mark.
Yeah, this is something that was a little eye-opening, a little concerning, but AARP, this is a study that they had just completed. Listen to this. More than half of the respondents, 59%, looking for post-retirement work, describe their economic outlook as poor. And here's the reason why. Due to insufficient savings and the absence of a traditional pension or retirement plan. Casey and I have been on this bandwagon for decades now about the importance of having a plan, number one, and number two, that how important the guaranteed income piece of that retirement is. We can't overemphasize that. And anybody that has a pension, they know exactly what I'm talking about. We have a lot of Boeing clients here, right? And they are so thankful they have their pension. After the strike this last time, what did everybody want back? It was the pension. Boeing's never going to do that. Now they've got nice benefits in their 401k, but they would. I'd much rather have a pension, a defined benefit plan versus a defined contribution plan is what I'm trying to get out of here. And the bottom line is why? Because it's guaranteed income for as long as you live. And we can't overemphasize how critical that is in planning.
Yeah, exactly. That's really it, right? Because that's your baseline. That's your ability to spend every dollar that comes into your bank account that month and know that next month I'm going to get the same exact dollar amount, which means that I can say yes to the trip. It means I can say yes to the new car. It means I can say yes to whatever that thing is that you want. I can say yes to going to my grandkids' graduation on the other side of the country because I know I can afford it. It's taken care of. And it doesn't matter if the market had a good day or a bad day, right? Your retirement doesn't live and die by the S&P 500. And that's the thing, right? Is we see so many people that their retirement is predicated on the success or the even just the general short-term success of the market. That's a recipe for disaster. That's a recipe for why this article was written, right? That's really what it comes down to. And so that income is what's going to give you the confidence. And that's why we talk about it so much, because we want people to enjoy their retirement. Right. I don't want you in retirement checking the stock market every day to see if today is going to be a good day or a bad day for you emotionally. That's not what this is supposed to be founded on. Go enjoy it.
Yeah, in fact, we're going to be talking about that here in just a minute on this BlackRock article. But I want to just add that Fidelity put out a nice study the beginning of this year on 7 smart money moves for 2026, and number 6 on their list was setting up more guaranteed income. Okay, and they mentioned annuities in there. This is coming from Fidelity, okay, one of the largest custodians in the world. And now we're going to be talking about BlackRock saying the exact same thing. So again, this isn't just Casey and I talking about this. The largest money managers in the world are coming out and telling all of us, you need to have guaranteed income. It matters.
You're tuned to Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle. And, of course, our hosts are Mark Stimpson and Casey Elkins. I'm Morgan Patrick. And just talking about, we led off the show talking about older Americans returning to work and the reasons for that. Obviously, the economy is a concern. But having, something like words like secure, guaranteed, and that income for your retirement in the middle of chaos, those are comforting words. And now we move to article number 2, and BlackRock is a big dog, and they are warning investing in the S&P 500, guys, isn't enough for retirement. They're recommending a strategy that prioritizes income. That's what we're going to talk about now. But this is an opportunity for you guys to get on your soapbox. This is a big name saying don't lean so heavily on the S&P.
That's right. That's got to be a strong soapbox to hold both of us. But yeah, I think that's the thing, right? Is it really does come down to the income. As Mark just mentioned, this is something that we've been beating this drum for a while, right? And you've been listening to the radio show, you know that. If you've seen us on TV, you know that. If you've come to a retirement class or workshop that we teach at a college, you know that. If you've read our book, you know that. If you've even been to our website, you know that we are on the income train because it's about stability, it's about confidence, it's about the emotional gratification that comes with retirement. It is not just about the finance aspect of it. And so this article really popped out to us because BlackRock, largest money manager in the world, they manage more than $14 trillion globally. Okay, so that's a serious number. And what I'll say is this. You don't get to manage $14 trillion if you don't know how to do it, right? So they know something. They're doing something right. Mm-hmm. And for them to come out in an interview with Bloomberg, and this is their global head of retirement solutions that said this at BlackRock, he said there needs to be an evolution away from indexed indexed only. And we see a lot of people that the majority of their investments are S&P 500 index. And there's nothing wrong with S&P 500 index. I'm not here to bash that. That's not the key. The point is there's other things besides that, right? And what he's saying is we need to get away from that and really start to create more income. And that's really what it comes down to, especially for retirees. And you'll notice this gentleman, his name is Nick. I don't know how to say his last name, and I'm going to choose not to butcher it on our show here, but he's the global head of retirement solutions. So this is not the individual talking to 25-year-olds. This is the individual talking to people that are 5 to 10 years from retirement. And that's why this stands out to us, because that's what this show is. This show is for people that are 5 to 10 years from retirement, people that are already in retirement. And how do you create success there and stay successful? And ultimately, how do you become retired and how do you stay retired?
Yeah, in fact, there is one sentence in this article that I think really says it all. It boils right down to this. Instead of focusing solely on building a nest egg, BlackRock says investors need portfolios designed to deliver a steady stream of income, a potential shift toward a paycheck for life model in retirement. Yeah. Tom Hegna, Tom has been saying that for over 20 years now. And isn't it interesting that it finally seems to be hitting the Fidelities of the world, the BlackRocks of the world, how important this truly is. And like Casey mentioned earlier, we've been on this bandwagon for decades now, and it's never going to change for us, because why do we save in an IRA or a 401k, right? We know it's to create income on the backside. So now what we have to help our clients is find the best way to do it.
Right. What's the best way to do it? What's the thing that's going to give you exactly what you're looking for, and use the right tool in the right application? And that's always a big thing for us, right? We've used the analogy before. You don't buy a big truck for good fuel mileage, and you don't buy a Toyota Prius to tow a boat. And it's a funny analogy. It's a funny, picture in your mind, but it's the reality, right?
Yeah.
Could you imagine this, this great, wakeboard boat being towed down the side of the lake by a Toyota Prius? You'd be like, that guy's crazy, right? He's lost his mind, and rightfully so, because it's the wrong tool. And that's what we see people using index investments, S&P 500 index or NASDAQ, to try and create income. And it's a big miss, and you're going to be disappointed. And so how do you do it, right? How do you do it the right way? And a lot of that really comes back to having a plan. It really does, right? It comes back to having a plan that allows your investments to work together, and allows you to go be successful despite what's going on in the broader scheme of things.
And everybody is different, and that's why you have to have these conversations. And again, we produce this radio show. You guys do your television show, and you're providing this kind of information, but it is kind of a broad swath of information for our masses to really dial it down and to get personal. I mean, you've got to come in. You got to sit down. You got to talk about your own numbers and how it all fits together. And that's what we do each week. We offer these spots on the calendar, and they're no cost, they're no obligation. Mark, kind of walk us through how the appointment's going to go.
Yeah, I just want to echo to our listeners what Morgan just said. We want you to come in. You're going to keep your checkbook at home, and we're going to have nothing more than a conversation. That's it. We want to get to know you. You want to get to know us a little bit. Kick the tires, you might say. So we're going to talk about taxes a little bit. What type of tax strategy do you have right now? Might a Roth conversion make any sense? What about your Social Security? How do I know when and what's the best strategy for when it comes to income? Do I use a spousal benefit? What about a survivor, right? Medicare. Do I go with a Med Advantage or a Med Supplement? So many levers that you're going to need to pull in retirement. We just want to have a conversation and help you to make a decision that you're going to be excited about, and is going to create the type of retirement that you've always dreamed about. And we want to help make it a reality, not just a fairy tale.
All right, it's complimentary, no obligation appointment. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. And then come in and talk about that paycheck for life. Come in and talk about your retirement plan. Call the number 866-668-3625. That's 866-668-3625. Again, complimentary, no obligation appointment awaits. 866-668-3625. We've got more Elevate Your Wealth coming up on the other side. Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle. Your hosts, Mark Stimpson and Casey Elkins, got over 50 years combined experience helping their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick. I want to remind you, too, our book, Break the Glass. Again, Mark and Casey wanted to put this out, and they want to make it available to you. You can go to breaktheglassbook.com. That's breaktheglassbook.com. Sign up there. They'll ship it out to you free of charge. Again, it is a resource, breaktheglassbook.com. Go get signed up for that. And we're going to give you an opportunity to grab one of our complimentary, no-obligation appointments to come in to the office and talk about your retirement situation. And it might be one of two places. You're sitting on the portfolio, you haven't started planning. We've been talking about, how nervous it is right now to be in the S&P 500, to be in the market and everything that's going on. What is your portfolio doing? Should you be talking about protection? And you've got to answer that question for yourself, right? So having one of these appointments available to you gives you the opportunity to have that conversation. We'll tell you how to grab one here in just a little bit. But again, this show, we grab the latest articles when it comes to planning, and we talk about them. And the next one, guys, how to best use annuities for retirees. And I'll say this, I've seen the headlines. I mean, the annuity sales are through the roof this year.
Yeah. And I just want to say, we're talking about the A word.
Yep.
Right. And the one thing I want to encourage our listeners is be careful of the noise. We don't just believe in annuities here. I want to stress that. We manage a lot of assets. In fact, our RIA firm manages billions of dollars. And so, again, what we have to think about or talk about is something that people need to understand.
That's the thing, right? Is when it comes to annuities, the idea is just keep an open mind, right? And we're going to talk a lot more about this over this segment, but really keep an open mind. There's a lot of misconceptions, and I will give you this caveat right out of the gate. It's not the right thing for everybody. It absolutely isn't. But at the same time, it's also not the wrong thing for everybody either. So it might be the right thing for you. I don't know. It takes a conversation to figure that out, and we're going to talk about that. But the other piece to this too, there's been more money flowing into annuities in the last, I think they've made new highs every year for the last 2, maybe 3 years.
Oh, yeah.
Money moving into annuities.
And why is that?
It's because, one, there's more education, right?
Yep.
So that people better understand it, and there's more advisors talking about them and the benefits associated. And there's different products. The landscape is changing, right?
Dramatically.
And with interest rates changing, that affected annuities in a really positive way, right? And higher interest rates was a negative thing in a lot of ways, but it was a great thing in a number of ways too. And so it's something where it's worth the conversation. And you know what? The reality is it takes a fair amount of time for Mark and I to put things together for this radio show. It absolutely does. It takes brain space. It takes planning. It takes commitment. It takes commitment from Morgan and the rest of our team to be able to do this. Mm-hmm. And this article or a conversation about annuities would not get 10, 12 minutes on our radio show if it wasn't worth your time as the listener to not only listen to it, but to take advantage and have a conversation to see if it fits for you. And so please, if you have a negative conception or negative connotation in your mind when Mark said the word annuity or when we talk about it, let that melt away for a second and let's just talk about the potential benefits that come with it, right? That's really what this comes down to. And if it's not the right fit for you, no sweat. But the worst thing you could do is learn something new.
Yeah, in fact, this is important for the listeners. A lot of listeners don't realize this, but if you are fortunate enough, maybe from Boeing, to have a pension, every pension in the United States is an annuity contract. And we don't know one client that doesn't want, when we ask them, would you rather have more pension or less pension? What does every client say?
Nobody's ever said less pension.
Nobody says less because that's, it's just not rational to say that. I'd rather have as many pensions as I could get my hands on. I had an experience with one. He had 3 pensions and Social Security, and I said, "How did you do that?" And you know what he said? He goes, "I have one that was military, civil service, and a private pension." And then I asked him how much guaranteed income he had, and it was close to $14,000 a month that's guaranteed. And he made this comment to me. I will never forget this. He said, "If I lose the money that's in my Ed Jones account, that he didn't care." Now, we know that's nonsense, but I knew what he was trying to say. He says, "I have more income than I spend every month. My lifestyle doesn't change because of losses in the red bucket." We call it the red bucket, the money in the market, right? Yep. It's all about his guaranteed income. So I just want to stress how important guaranteed income. It matters, and it should to every one of our listeners, because you saved money in a 401k or an IRA to basically, hopefully, live out dreams and make realities happen right on the back end when we retire. And that means we have to turn it into income, right? That's what everybody needs to do. That's a thing that some people don't really think about. They've got this chunk of money and they just don't know what to do about it. So again, it's just something to think about.
Yeah, a lot of people really struggle with that. And I think here's the thing, right? We've said this before. Our happiest clients are those with guaranteed income streams,
no doubt
right?
about it.
And not just Social Security, but a pension, right? And that's really the key behind this, because it isn't just the numbers. And we say that a lot, but the reason that we say that is because it's about the psychology behind it. It never feels good to call your advisor and say, "Hey, I need $30,000 out of my account." Most people won't do it. They'll do it if they absolutely have to, but most people won't do it to take the trip. They won't do it for this or that because it doesn't feel good. Psychologically, that hurts, right? It's like pulling cash out of your pocket. That hurts way more than swiping a credit card, right? So the point is how do we set it up in such a way that you can spend it and spend it well? And the article says this, and I can't say it any better myself, so I'm just going to quote it. It says, let's start with a simple but overlooked truth. Retirement is not just about having the biggest nest egg. It's about being able to use that money without fear. And that's where the real behavioral challenge lies. And that's exactly it. That's the biggest challenge that we face here at Elevated when we have conversations with clients, is about giving people the confidence to spend the assets that they have. And that's really what it boils down to. It doesn't feel good to slowly deplete your investment accounts. People hesitate to take trips. They don't fund the renovation or the upgrades at their house. They don't do fun things with their grandkids because their retirement feels fragile. It feels like, well, can we really do this and still be okay 10 years from now, right? And something like an annuity that can help create guaranteed income for you, a personal pension, a private pension, or a pension even from your work, that is what gives you the confidence. That's what makes retirement feel strong. And that's what this all comes back to. As a matter of fact, in our book, we talk about this a lot. Morgan, I think you mentioned that. Break the Glass, that's the name of the book. But it comes back to planning. It comes back to income and taxes. And as a matter of, this would be a perfect time. I'd love to share it. So for folks that would like a copy of the book,
Sure.
You can get a copy of the book if you go to breaktheglassbook.com. We talk about income, inflation, healthcare, taxes, Medicare, Social Security, all the things we talk about on our show, and it's meant to be easily digestible. Again, it's breaktheglassbook.com. We'll send you a copy in the mail. It'll come in a golden envelope, so it's your Willy Wonka golden ticket to retirement. Take advantage of it. We'd love to share it with you. We'd love to have you read it, and it's just an extension of the show. But, back to the idea of annuities, it's worth the conversation. It really is.
There's one main question that I love in this article. It says, how can I stay invested without putting my retirement security at the mercy of the next bear market? Mm-hmm. That is such an important question. Yeah. And see, the annuities, the FIAs, the fixed index annuity contracts can do this. In fact, many investors just think that the way they work and be able to get a paycheck for life just sounds too good to be true. But I love what it said. These are not just financial magic. They are the type of things used by big commercial institutions, and it says they are consumer-friendly adaptation of hedging strategies long used by institutional investing. Mm-hmm. That's really what annuities do, right. But it's available to the average investor. And that's why, please, be open-minded, be willing to learn a few things, because if you do, you might be pleasantly surprised how powerful an annuity can be if it's used in the right situation.
Right. And, I think the other piece to this is a lot of people have annuities already and they don't know it.
Right, exactly.
Right? So for all the folks listening that have a pension, oftentimes, not always, but oftentimes when you fill out your pension paperwork, it says on there that you have to select your annuity options, right? It is a pension, but it's an annuity. That's the key, right? It's going to pay you for the rest of your life. And that's it. Don't let the word scare you away. If you just understood the benefits, the pros and cons, and where it fits and that kind of thing, that would allow you to better make the decision as to whether or not it fits for you. But the word itself scares people away up front, and we see the guard come up sometimes when annuity gets mentioned. Don't let that scare you off.
Knowledge, and we say this all the time, knowledge is power. And if you've got questions, talk with people that do this on a daily basis. So many, look at the number of annuities that are being, sold. People are putting their money into these annuities. That's not just by happenstance. They're educating themselves. They're figuring out what's the best method for me, and it needs to be individual, to get into and through retirement and do it in a safe, secure way. And these conversations can happen. It's an opportunity for you to get on the calendar with Elevated Financial Management right now. No cost, no obligation. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Casey, kind of walk us through it.
Yeah, this is your chance to figure out if that annuity is the right thing for you, right? We'll talk about that. If you want to figure out what it might look like and how that could benefit you, that'll be part of the conversation. It's the same with when you should start your Social Security. What are the right investments for your retirement? How do we take the nest egg that you have and not only continue to grow it to keep up with inflation, but at the same time create the income that you need? And how do we make sure that we're tax efficient? So all those questions, we know that those are what's at the top of people's minds because we have these conversations all day, every day. And so this is your chance to get a custom written financial plan tailored just for you. Again, you'll leave your checkbook at home. Who we are on the radio is exactly who will be in the office. Come in and let's have a conversation.
All right. Grab an appointment right now by calling 866-668-3625. Again, no cost, no obligation. Again, 866-668-3625. This is your opportunity to have a conversation about you, have a conversation about your portfolio, have a conversation about your retirement. 866-668-3625. When we return on Elevate Your Wealth, it's time for scenarios. We've gathered some. We're going to throw them at the guys, see what they come up with next. Elevate Your Wealth, powered by Elevated Financial Management, found right here in Seattle. Our hosts, Mark Stimpson and Casey Elkins, that's where you can find them. They've got over 50 years combined experience helping their clients get ready for retirement. They're certified financial fiduciaries. They're authors as well. Break the Glass is out, and you can go to breaktheglassbook.com. If you've got questions about your retirement, this is a resource for you. Breaktheglassbook.com. Just sign up for it. They'll ship it out to you free of charge. breaktheglassbook.com. Again, I'm Morgan Patrick. It's time for scenarios, guys. Want to remind our listeners, too, there's one more opportunity to get on the calendar with Elevated Financial Management. No cost, no obligation appointment. Stay tuned for that. So here's the scenario number one, converting to a Roth in a lower income year. So here's the situation. A recently retired couple living on about $70K a year from savings before claiming Social Security at 67. They have $800,000 in a traditional IRA and are wondering if this gap period is the right time to convert some to a Roth. They're worried about paying too much in taxes now, but also about future required minimum distributions pushing them into that higher bracket. How do you decide when a Roth conversion makes sense, especially early on in retirement, guys?
You know, just based on that, I mean, that's a great time to do it, really, right? If you've moved into retirement, you don't have your wages anymore, you don't have earned income, and you're living off of your savings, then that's a great way to go about it because your income is probably, in terms of taxable income, is at an all-time low. And so this would be the time to take advantage of it and do a Roth conversion because you might be able to do that conversion at some at 10%, some at 12%, some at 22%. And your effective rate across that conversion could be very, very low, which is great. But, you know, for a lot of folks, that is not the reality for them, right? Very few people retire and don't start pulling from their retirement accounts almost immediately. And so for a lot of people, that's not the scenario. So how do those folks make sure that they're being efficient with their Roth conversion strategy at the same time? Well, doing a Roth conversion, filling a tax bracket. So if you're in a 22% tax bracket, let's say, and you're somewhere in the middle, so maybe you've got $50,000, $60,000 before you hit the top of that bracket, that's a great way to go about it because now you're not moving out of the bracket that you're already in. Chances are you're not going to be in a lower bracket or later on in retirement. And so doing that conversion that way is another great way to go about it. Something else that you can do is you could potentially look to try, if you're a number of years before retirement, you could look to save in your checking and savings account for the first couple years of retirement. And if you save enough cash there, you can take the distributions and live on that money, and that'll give you a lot of runway to be able to do Roth conversions. So there's a number of different ways to go about it. And it's not the same for everybody. And to be perfectly frank, a Roth conversion isn't the greatest thing for everybody either, right? Just like we talked about with annuities, it fits for some and it doesn't fit for others. a Roth conversion is often talked about like it's the best thing for every individual. It's not. It's not valuable for everybody. And there are rare circumstances where you might be in a lower tax bracket in retirement or later in retirement. And so again, it all comes back to having a plan. It all comes back to that conversation.
And guys, you talk about it all the time. I mean, if there is a time to have the conversation, it's while the window is open.
Right.
And right now the window is open. So it might not be a good fit, but at least have the conversation.
Mm-hmm. Yeah. When do you have the runway, right? That's the thing. You don't, not that you can't come see us when you're a week before retirement. You absolutely can, but your runway to make adjustments is a lot shorter, right? So if you're planning, that's something you want to do with as much runway as possible so that you can make adjustments without going off course. And it is time to have that conversation sooner rather than later. Worst thing is you walk away with some new information. Right?
There you go. Knowledge. That's what it's about. Again, opportunity to grab one of those appointments is right now. You can, again, call our number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. If you've got questions, if you're just sitting on a portfolio, man, this is an opportunity. 866-668-3625. All right, next scenario. And the category, planning for a 30-year retirement. Here it is. Healthy 66-year-old with $950K saved, no pension, is budgeting around $55,000 per year in expenses. They're concerned that living into their mid-90s, which isn't much of a stretch nowadays, a lot of people are living longer, this could stretch their portfolio too thin, especially if inflation averages 3% or more. They don't want to live too frugally now, but they're afraid of running out later. So how do you build a plan that balances enjoying retirement today and protecting income for decades, Mark?
Yeah, I think if you're listening to this one is really a critical one to really be paying attention to, right? We talk about longevity risk as being the risk multiplier. So the longer we live, it just makes common sense. Your money's got to last longer, right? So are we going to have income that we can be guaranteed that's going to last that long? And we just talked about the power of annuities. Well, pretty much every annuity that we set up, that's the case, right? They're gonna have income, whether it's a joint life or a single life. They're going to pay for both mom and dad until they're both gone, and that's that paycheck for life that we've been talking about. And to think that this isn't going to happen and that your mid-90s it just won't happen to me. We have several clients that tell us that too. And I tell you what, I know in my own family, my grandfather on my dad's side, he lived till he was 97 and he had Alzheimer's. And his wife, my grandmother, lived to 92. So again, people are living longer than before. We've got clients now I have that have hit 100 already. So again, you better have a plan for this because it was mentioned here, 3% inflation. Casey and I run our proposals and our what we call our SIPS report, structured income plans, at only using 2.5% over time. And it is amazing. If we only up at 0.5% to 3%, how much more money it truly takes. And nobody really considers that until we show them this on the board or in their plan. And it's staggering. And I hope you're listening today about this because inflation matters. Taxes, like Casey just talked about, having a plan for this is why we feel so compassionate about it. We talk about it in our book, every class that we teach. One of the biggest things we talk about is sequence of return risk, how that can blow your portfolio up if you're not careful, if the market turns down at the wrong time when you start to draw money out. So having a guaranteed income source is really the bedrock for everything that we do here. And I think you probably agree with that, right, Case?
Yeah, 100%. And, just to touch on the idea of folks living longer lives in retirement, that really is the case, right? I mean, we see life expectancy continue to go up. And it's not going up by, 5 years every year or something like that. But the reality is the longer you live, the longer you're going to live because medicine is advancing that fast, right? Yep. Medicine is advancing. And so people are living longer lives. We see that. And so if you plan a 25-year retirement and things run out at 25, man,
that's a problem.
Yeah, 26 years is going to be a real issue, right? And so I know that we say that kind of tongue in cheek, but that's the reality of it. And so don't shortchange yourself when it comes to that. And you think about lifespan and life expectancy, and you might think, well, my dad didn't make it very long, or my mom didn't make it, my grandparents. Yeah. That doesn't mean that that's the case for you. Just the same way that the opposite of that isn't true. You can't look at mom and dad and grandma and grandpa and go, they all made it into their 90s, so I'm pretty much guaranteed. Well, that isn't true. And the opposite of that also isn't true, right? So don't shortchange your retirement and think that things are going to be short-lived when in reality they could be much longer. And you may have a fantastic time living that much longer because of advances in medicine. So, don't let that scare you away. It all comes back again just to having that plan.
In fact, every show that we pretty much do or class that we teach, we talk about there's 3 phases to retirement, right?
Right.
Go years, slow go years, and no-go years. And we want every one of our clients to usually have more money on the front end, which means more income, right? When they're healthy, when they can go do things. Because if you're confined to your home or even worse, maybe to a bed, you're not going to care that much about how much is in your retirement account, unless you're needing that, of course, to pay for the space. But the point is, this is why we believe so heavily in a plan. It's critical.
Yeah, be proactive, have the plan in place, and bring your scenario to the table. We'll give you an opportunity to grab one of our no-cost, no-obligation appointments with Elevated Financial Management after our final scenario. And here it is. The category, when safe investments feel too safe. So here's what's going on. After moving most of their $700,000 portfolio into money market accounts, earning around 4%, a retiree feels relieved but worries they may be missing long-term growth. They remember 2022, the losses, and you don't want to go through that again. At the same time, they know inflation could quietly erode their savings of over 15 to 20 years. How do you help someone regain confidence in investing without taking on more risk than they can handle emotionally, guys?
Yeah, that is a real balance, and it's something that we struggle with, right? Because oftentimes the risk that you can tolerate within your portfolio does not match the risk that you can tolerate emotionally. And so there is kind of this struggle at times. But I'll tell you what makes it a lot easier to take risk in your investments is knowing that your income's taken care of. That's one of the easiest ways to solve that problem is I know that my income is taken care of regardless of the volatility associated with my investments. And that gives me confidence to accept that volatility and know that I'm investing for long term. And so that's one of the first things that we do. That's not the only tool, but it's one of the first tools that we use and look to employ for most, if not all, the folks that we work with, so that they can take that risk confidently.
Yeah, so if you're listening right now, as we're talking about, do you know how much risk you're actually taking inside your portfolio? What should I do when it comes to Social Security? Should I wait? Should I, start early? So many questions there. What about Medicare, Medicaid planning? How do I want to pass money to my children? These are questions that everyone needs to know about and have answers to. So please, give us a call and let us help.
All right, opportunity right now. Get on the calendar with Elevated Financial Management. Meet with Mark, Casey, the team. Again, this is about you. This is about being proactive. This is about asking questions and getting answers back. We always say it. Knowledge is power. And this is your money. This is your retirement. Call us right now, 866-668-3625. Grab one of our complimentary, no-obligation appointments. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call our number, secure an appointment right now, 866-668-3625. In a world of chaos and doubt, you need to have a plan for your retirement. Call now, 866-668-3625. Another edition of Elevate Your Wealth, powered by Elevated Financial Management right here in Seattle, is in the books. For Mark and Casey, I'm Morgan. See you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.